following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. It's a TGIF, folks. Let's make it a great weekend. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 272. Nasdaq's off 109. S&Ps are off 30. We get option expiration. You can expect big volatility in this last hour, folks. Right now, you get the Dow down 1.5%. The Dow's down 1%. Nasdaq's down 1.5%. S&Ps are down 0.9%. I expect you're going to see quite a bit of selling coming into the close out here. The SMH has already broke a B point with volume. You get an ABC structure on the way down. Gold contract down $11.30, trading at $13.37. We get silver down 10 cents, $17.13. Light sweet crude flat, $68.29 a barrel. Notes and bonds. So here we go. 10-year note down 9 ticks, 119.17. 30-year bond down 22, 143.03. Now, what's going to be intriguing here is this. You have notes and bonds trading at the lows of February. They're right there. The real question is, if we take a look at the S&P, the first leg down in this market, folks, from January through the 9th of February, January 29th, we were at 2,870. 2 weeks later, you were at 2,532. That leg right there had to do with the aspect how fast short-term rates went up. And that's what I suspect we have selling out here today. Right now, we have hit 950, which is the high, by the way. If we take a look at the 30-year, let's go to the 30-year. We take a look at the 30-year. 30-year, not as close as the 10. The 10's right. Well, the 10's at the yield, high for the year, rather. So the 30-year, you're at 143.05. The 30-year, that's 141.14. Different ball game. Now, if we get inside this for a second, let's go take a look at that curve. So when we take a look at the curve, you get 2.949 on the 10 and 2.451 on the 2. So 45 and 94. Okay, so that's better. So this is what's going on. The curve is widening out instead of flattening, and that we want that. That's the bottom line. The real question is going to be coming into next week, because I don't these bonds and these notes aren't going to hold. Well, they're not holding price right now. The real question is going to be if, in fact, they do break out that low. Then I suspect what we're going to end up doing there is that this is going to be the replay of the January down to the February area. And what the selling is about is that the rates are going up so quick that the market is freaking. King dollar up 380 ticks, trading at 90.07. We got the euro trading at 122.83 to $1 US. The yen is trading at 107.58 to $1 US. Well, you know, when we take a look at the S&Ps, what you have is this. Okay, so you got to remember you have option expiration. Option expiration is going to bring a lot of volume into the close. If we take a look at the ETF structures, they already have volume. We've done 66 million thus far in the SPY. You're going into 63 million. So bottom line is that this thing not only wants lower price, it looks like, which is going to be intriguing, that we're once again on our way down to these lows, and we'll see what kind of juice we get as we go lower. NDX 100, the 3 Qs, same setup inside the 3 Qs. The Qs have already done 34 million shares. We came down yesterday with 34 million. The Qs will end up putting about probably 50 million into it as it's going lower. Now, inside the NDX 100, the strength versus the weakness. You got Alexa Pharmaceutical, which is down 4.9%. You got JD.com, which is down 4.6%. Apple is down 4%. NetEase is down 3.8%. If we get over and we take a look at the SMHs, what you're going to see, and this, by the way, is another indication that this is not only a correction, we can be in a large correction, because what you have now is that you have sectors doing ABC structures on the way down. SMHs, we're at 98.53. You're breaking the swing point. You get monster volume on the break. This is a setup to go after the 91 area, actually, and the swing low is 93. So that's on the daily. We put this on the weekly. It's probably busted on the weekly too. Yeah, it is. So check this out. So you're busting on the daily. You're busting on the weekly, meaning you get game at 93.88, which was the swing low out there from the week of February 9th. Big numbers. Gold contract. What do we have with the gold contract? Gold contract bottom line pulls back. Has lighter volume on the pullback. For the context of where the dollar has gone, it's not the end of the world in gold. 261,000 contracts. You're going against 450. The GDX, bottom line, they're not selling off the stocks. The GDX right now is down 38 cents. You get 28 million shares traded. You are going into 73 million shares. That's a decent setup. If we take this and we put this on a weekly, what you're going to actually see is that you're going to be pushing into your downdraft on the GDX, and you get some decent volume. We had 220 last week. You got 170 this week. They will put about another 20 million. Well, they put about 10 million shares into the GDX as we're coming into the close. Some of the higher volume stocks out here. Let's go take a look at them. We have. You get GE up 62 cents. Apple's getting smoked. Apple's down $7. Skechers is down $11. You have Cisco Systems down 68 cents. Facebook is down $2. Philip Morris down again. That's down 143. If we go over to Apple and take a look at Apple, what you're going to see, no one loves Apple anymore, folks. You talk about barreling down. This is barreling down big. $7 down. You're going after the lower swing point. This would be an ABC because of the fact that it did a counter trend retracement that was past the 0.618. That being said, guess what? It's barreling into the swing point. That swing point has 36 shares, 52 million. Apple's on its way down to this 150 area. That's the high volume low on February 9th. February 9th, folks, is the number. Big time, too. Right across all indices, all sectors. Stay right there. Come right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 276. Nasdaq's down 111. S&Ps are down 31. If we go inside the NDX 100, folks, you'll see what type of selling we have out here. It's quite a bit. We pull this baby up. You're going to see inside there's 102 stocks in the NDX 100. It's because of Google. Bottom line is only 3 that are positive. You got Shire, which is in a takeover. They're getting taken over. That's up 3%. $3 rather, and 82 cents. You have, there we go, a second. There we go. You got Shire that's up $3.82. Lamb Research up $1.26. Ulta Salon's up 72 cents. Vodafone's up 28 cents. Microchip's up 17 cents. eBay is up a penny. Other than that, see ya. Don't want to be ya. You got Amazon down 38 bucks. You got Google down 16. NetEase is down 10. Tesla's down 9. Intuitive Surgical's down 7. Apple's down 7. Broadcom's down 6. Baidu.com is down 6. Inside the Dow Industrials, what do we have? Strength versus the weakness out here. Point-wise, this is what you have inside the Dow. Apple is the big mover, putting 48 negative points inside the Dow. Boeing's putting 26. The only stocks that are putting anything positive in the Dow is that you have GE is putting 4 points in. So GE is a non-entity, folks, big time too. Let's go over to GE. So for GE came out with his numbers. Bottom line is that they said they're going to do some decent numbers. So we'll see how this shakes out. This has been the first bounce in GE in quite some time. You're trading at $14.63. And let's put this on a weekly for a second. Okay, so this thing can bounce up to $16 pretty easy. So $16 would be your downdraft from the week of the 19th of January. We did 780 million shares there. You're going up in 419, and that'd be a normal bounce. It's an anemic bounce. There's no doubt about that. But you figure GE actually hasn't. Last time it bounced at all, it bounced from $17.25. December of this year, of 2017, it bounced up to $19, then made the next leg down to $12.73. GE came out not only with numbers, then they came out this afternoon. They're in talks to unload their rail unit. Bottom line, folks, my take on this baby is that they're going to have to unload everything, and then guess what? Oh, actually, I'm going to stay with GE for a second because this is you want to see this because I've talked about this in the past. And this was a big heads up. So GE had to write off another $1.5 billion for subprime loans. GE, folks, is still on the hook for big dollars from 2007, 2008. And that's what I suspect they are going to get absolutely toasted on with the SEC. That's I suspect when all said and done, that's where the intense cooking of the books more than likely was taking place. That the company was so big that even when they pushed, what they did is this: they pushed Genworth out. They already wrote off like $4 or $5 billion in Genworth. They pushed the subprimes out, but guess what? They're still on the hook for them. That's what's going on. It's like you sell you sell to someone else. You're still on the hook for the losses, and they're on the hook for big losses. And $1.5 billion, I suspect, is nothing compared to what we're going to see come down the pike. We go take a look at the Exxon. Let's go over to ExxonMobil. So the energy stocks, bottom line, took a long time to basically get off their lows. Now, what's going to be intriguing is that Exxon went from 72 up to 79. Backing down today. Now, these are backing down with light volume. So I expect you to see, this thing's going to be down to 77, but it's going to be intriguing to see what happens there because energy stocks themselves love trading in very large ranges. That's what they just do. They do that on a continual basis. And the range that we got right now inside that market is pretty cool. It's a very large range. Inside the financials, let's go take a look at the financials. Now, there's a disconnect. This is where the disconnect is in the financials. You have the note and bond market getting croaked. You do have the spread, meaning we just looked at the curve. The curve got 10 basis points wider today. That's the ultimate for banks making money, folks, okay? But yet the banks still can't handle price. So it's pretty cool having these disconnects and divergences in the marketplace because bottom line, one is going to basically win over the other. Out here today, the banks are saying, hey, guess what? Even if the spread gets bigger, everyone's selling them off. You had the XLF today get up to a price point of 28.04. Couldn't handle it. You're at 27.78. We go to JP Morgan. We know factually the banks come out with their numbers. They were great numbers. Bottom line, they can't hold price. Why? Guess what? Because there's more selling than there is buying. When we do take a look at the bank structures, you still have high volume lows from February 5th. These babies, they're going to get tested, number one. The real question is going to be, on the test, do they blow through those numbers? Or do they hold? And that is the consolidation that we're in. We're going to know pretty soon. The intriguing thing here, on an option expiration that we're going south, then we're coming into next week, but by the end of next week, we're in window dressing. You're not only in window dressing, what we're in, and this is what's going to be really cool as to where we are going to be in earnings big time for the NDX 100 stocks. You got the Google. Google is going to report on the 23rd. You got Facebook on the 25th. We have Microsoft on the 26th. They got Amazon on the 26th. This is going to be really cool watching this whole thing shake out. Now, if we go back to the S&P, and this is my take of how this thing's going to shake out. So check this out, because this is like you put a frog in water and you just do a slow boil. I'd never do that. We wouldn't want to do that to anyone. But that saying, okay, is important to wrap your head around. This is why. The S&P topped out in January at 28.72. You had the first leg down to 25.32. You come all the way back, huge counter trend bounce. You get to 28.01. That was on March 13th. You go south again to 25.53. We do another bounce. we get to 27.17. Well, we're still 150 points off the high. It doesn't seem that the market is down actually as much as it is. And if we take a look at this, what you're going to see is that I'm going to take a look at both of these bounces that we had. So the first bounce that we had, going from February 9th up to the 27th, monster bounce. That did a 786 bounce. The second one was still a good bounce. It was a 0.618 bounce. So that's still a decent bounce. Bottom line is that, will the next one be even weaker? Stay right there, folks. Come right back. Dow Industrials down 258, Nasdaq up 104, S&P's down 29. Right.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials down 262, Nasdaq down 106, S&P's down 30. Let's go over to our man, Mr. Dave White, as we do each and every Friday at 30 past the first hour. Don't forget, folks, Dave's got a great show here every trading day, 2 to 3 Eastern Standard Time. Also has 2 great newsletters. He has the Tech Insider. That is his investment newsletter. He has the Path of Least Resistance. That is his trading newsletter. The way you can get either one of them or both of them, come over to our website at TFNN, go to newsletters, go to either trade and newsletters or investment newsletters. They both come with a 30-day money-back guarantee. Dave White, what's going on?
Well, it's been a long time since I've seen the kind of demand in the computer business that we see, at least in the last couple of weeks. It looks like it's going to last even a couple more weeks, and that is the high-end video card business.
Okay.
I saw something, and I'd been looking, and I really didn't register, but normally once a week I'll check out Newegg's website to see what they have in computer components and stuff. I build my own computer, so I'm kind of always interested in it. I really didn't notice that for the last maybe 3-4 weeks they didn't have any video cards really to show on their website. And then I was watching a video about a builder on YouTube, and he was talking about the fact that these things are going anywhere from $200 to $400 above retail for these $1,000 cards. And so I started digging in a little bit more, and NVIDIA and AMD to a lesser extent than NVIDIA, is selling everything that they can make no matter what they throw at the market. So NVIDIA kind of getting a little touch of Apple's business, but them making processors for Apple is kind of like Intel. Everybody says, well, PC sales are down. Well, that's good, but it doesn't matter if server business is up, because selling one server is like selling 100 retail computers for them.
Sure. I mean, I get the numbers up in NVIDIA. I mean, 2017 they did 6.9 billion. 2018, 9.7. They plan on doing next year. They plan on doing 12.4 billion. Not bad, huh?
It is. But I was going to say all the semis are kind of getting tainted with lower sales from Apple last couple of days. Those processors that NVIDIA makes in their graphic chips, the most these guys can make on them are about $20 maybe, because that's all they sell for in a phone. They don't, there's only a handful of things that are really expensive in a smartphone: the screen and memory. Everything else are cheap parts, $10, $5, $20. So the most you could make if you made it for free was $20. Now, NVIDIA sells some cards, like one that I want, which is about $3,000. It costs them about $600 to make. So, they've got to sell 5,000, 10,000 phones to make the same amount of money that they make on one of those Titan X cards. So, when we're looking for earnings here in the SMHs, they've looked rather weak. This one will probably be the standout of it. And again, I can't remember for the longest time of a business that you couldn't meet demand almost instantly by calling up Taiwan and just saying, crank out another 100,000 of these things for me, and they did in a couple weeks. These guys are the demand for it. Some people are saying it's for all the new kind of Bitcoin devices. Both AMD and NVIDIA says that that's not true. That's a very small part of the business. Video games and machine learning seem to be the huge attractors at least for NVIDIA. AMD does a lot more in the Bitcoining side of it.
Yeah, well, what's interesting is that, so when you look at AMD, you're paying $25 for a dollar. NVIDIA paying $50. You have a 50 PE. Now, Lam Research only has 11.5. So you can see that inside the aspect of how they're getting priced out, it's intriguing, man,
It is.
Because NVIDIA's growing by 33%, but they still get a 50 PE.
Yeah, I'm just saying that probably if the numbers miss on some of these semis, NVIDIA probably isn't going to be the one that you want to go short.
Well, they're all in an ABC down, man.
Yeah, but
they're in monster ABC downs.
I have a feeling it will hold up better than others. Let me put it that way.
Yeah.
Okay. So, and two, their earnings are probably going to be good. So, maybe next quarter, better that their earnings are not going to be good. But I hate to short a monopoly. I certainly hate to short people that their products that they're making in volume. There isn't a supply problem, and making $200 or $400 over retail to get their product. That tells you something about the demand. Anyway, I want to talk a little bit about YouTube and Google. They're kind of been ignored for a while. I don't think there's a lot new in that business, but at least talked about a lot. Everybody talks a lot about Apple and some of these other companies and Facebook lately in that. But a couple of things that make me think that YouTube may have some lower earnings going forward, and Google too. YouTube, the CEO is basically trying to make nice with a lot of its creators. Unless you get about 10,000 people watching your channel, there's no way to monetize it anymore. And by doing that, it was easy to get rid of some of the people that got negative press for them.
Now, when you say 10,000 people, you're talking about 10,000 a day?
No,
10,000 a week, 10,000 a month?
10,000 subscribers.
10,000, I got it. Okay, cool. I got it. Okay.
Right. So if you subscribe to the channel, you got 10,000, you can
Yep.
start making money.
Yep.
If you don't, you can't. And that was the easy way to get around people that they thought might embarrass them for whatever they have on there.
Okay.
So they did that. Unfortunately, that's a huge amount of what they have. I mean, there's always going to be, the top 10 people that, have 6 million subscribers.
Sure, right.
But, you basically, that's 20% of the business. It's the other 80% that, all have, 50,000 or 10,000 or 5,000 subscribers to whatever channel they have. Anyway, they're trying to get and figure out a way to go back and do that. I thought, and a lot of people actually that were doing, that are in this business, actually even hurt the larger content creators too. So these guys are seeing their checks from YouTube coming down on a monthly basis. So there's a good opportunity for someone else to open up a shop in competition to this. I just don't know who it is. We do have at least Facebook doing their own videos and doing their things. YouTube continues to be the premier place to do it. But these guys, I'm wondering how much money in the last couple of quarters has been because they're not paying anything to these guys that have smaller subscriptions but are a huge part of their business.
Stay right there, folks. Dave and I are coming right back. We have the Dow Industrials right now down 237. Nasdaq's off 96. S&Ps are off 26. Gold's down 1130. Silver's off 10 cents. Dave and I are coming right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with Fidelity Sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. We do appreciate you growling and prowling with us out here. Don't forget, folks, you can get both of Dave's newsletters by coming over to our website at TFNN. Go to newsletters. Go to either trading newsletter or investment newsletters. You have the Tech Insider as well as the Path of Least Resistance. So, well, the YouTube deal, it's really hard for anyone else, I think, to get something going like YouTube. I mean, because, Dave, picture this. Everyone's on YouTube for free. I can't imagine what they cost them in streaming, because what has happened is that I remember we used to pay $5,000 a month just to stream.
Right.
Then we still pay like $3,900, and that's without YouTube even charging us.
Yeah, I mean, they still have the incumbent position, which is always what you want in technology. I'm just saying that these guys are leaving a lot of doors open, and it may make somebody like Facebook or somebody with enough juice to make these things actually go into competition with YouTube. I mean, you could see easily.
Yeah, I could see that. No, I could see that. I could see Instagram doing it because Instagram has all those young kids. You know what I mean? That's Facebook anyway. Yeah.
Amazon's got all the computers it needs. It could do it tomorrow and have the same bandwidth as YouTube.
Sure. Right.
So that's the one thing I'm always, if you've got a monopoly position, you try to kind of keep it, and that's it. Now, the other thing that I thought was interesting, it hits Google right square in the face, is that the German court, and it looks like it's going to be all of Europe, is going to say that ad blockers are legal, so that a lot of their scans may not be servicing ads anymore, especially if you're using the traditional Google search engine as it was. So they may start seeing lower revenues, especially from Europe, in the next couple of quarters. It may not instantly hit. They'll probably give them a little time. But they've been trying to do everything they could to thwart the ad blockers. And,
sure.
Europe kind of looks at them as Yankees. And so it's going to be a little tough. But, again, they haven't really been setting the world on fire. They just really do what they do. Business hasn't really gotten that much bigger for Google itself. YouTube's kind of continues to grow, but the search engine business probably kind of flat, and this could turn down the revenues from that fairly decently, at least in Europe. I assume that once these guys do it, everybody else is going to start glomming on, and that's kind of going to be the rule of the world. Intel, I wanted to go on to while we got some time here.
Okay.
They have a lot of new products coming out, but this was the most interesting thing I saw from them this week, and that is that in their chip, or in most chips that they make, especially retail chips for business PCs, home, and others, they put in their own video card. It may not be a great one, but it's kind of a video card in the chip itself for pretty good graphics, but nothing that if you were using high-end games on your PC. So everybody normally buys those additional video cards we talked about from NVIDIA. But what is interesting now is that since that one is kind of underutilized, they're going to be, or they do have a new division that's going to make virus scanners that literally run inside the chip instead of you running them through some additional software that you install on your PC.
Oh, that's pretty cool.
Yeah, so these things, you know, that chip's in there. In my machine right here, I have two big video cards installed. It's turned off. So this thing could run at full speed, and it wouldn't bother me at all. It may make the PC a little hotter, but that's about it. So anyway, these new virus scanners are going to be, you're going to be able to install new microcode for the chip, and it will run these even in the PCs without the or without additional.
That's going to be interesting to see what that does to security companies.
Well,
wow.
I think the security companies are probably going to get tied into this so that you'll know what's going on. At the low level, it's probably going to just be doing its job, right?
Yeah.
But it's probably going to send out a thing going, hey, there's a problem here, and that will go to Windows Defender or AVG or Avast or any of the other people that make all the other software. But at this level, at the microcode, it would be very easy to make sure that no one could run code that at least that they'd written into that microcode that might do something. This is actually going to make it a lot easier to take care of the issues that came out in February also. So, those chips, for the most part, have a lot of extra capability that you never use, even on those smaller units that are built into the chips. But this is probably a fairly decent, really brilliant solution. And, you always go, well, why didn't anybody think about this before? Because it makes a lot of sense of being able to do it on the chip itself. But this may be one of the big things that in the near future that gives a little bit of the edge back to the owner of the PC and a little less to the hackers going after it.
Yeah, I like that idea that something's built in so internally, right? That's pretty cool.
At a low level, so you really know what's going on. Amazon and Best Buy are partnering. We heard a little bit about this.
Yeah, that's pretty cool.
Well, you know what it made me instantly think of is that Microsoft, when they got in there to their big antitrust thing, they had a thing called Embrace, Extend, and Extinguish. Also, they called it sometimes Embrace, Extend, and Exterminate to go after anybody that was in their sites, like Ashton Tate with, and the other companies were making competitors to Word and everything else. My wondering is this kind of the end of Best Buy? Can they exist by themselves against an Amazon? I mean, right now, Amazon has their foot in the door, and basically what they're going to do is a lot of the unnamed brand TVs that Best Buy sells, like Insignia, which is their own brand, which is really, basically all those TVs are made by three people or three companies over in Asia. So it's not a whole lot, but these are all. Well,
you know what? This is what Best Buy's done. This is what I suspect they're doing with Amazon too. So when you go in Best Buy now, folks, right? They made a deal with the phone companies, so they give them a piece of it. Then they made a deal with Vivid. They gave them a piece of it. They made a deal with Google. All those sections inside of Best Buy,
the store within a store.
There's stores and stores, and that's gonna be the business model. And so that's a good business model, man. They're getting rents. They're getting percentages of the sales. I think that's how this thing's gonna shake out, man.
So you think it's more like Apple, which actually I think half of all the money that Best Buy makes is in 150 square feet in that cell phone area that they have. The rest,
Well,
big screen
until
TVs.
what's happening now is that the home security business is a monster. That's bigger. I don't know if it's bigger percentage-wise yet and dollar-wise, but inside the store now it's bigger. That happened this past shopping season. So I get a feeling. I mean, what a great business plan that is. Bottom line.
That is, unless you get run out by Amazon. Anyway.
Why would they run them out? That's just another distribution arm for them, without taking everything. The rent. Stay right there, folks. Come right back.
Will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 240, Nasdaq's off 99, S&P's off 27. We're talking technology with our man, Mr. Dave White. And don't forget, you can come right over to our website, get either one of Dave's newsletters. Just go to newsletters, trading, or investment newsletters. You get the Tech Insider as well as the Path of Least Resistance. They both come with a 30-day money-back guarantee. What else we got, Dave?
Well, British Telecom is shutting down the traditional phone service that we've had forever.
Really? Wow.
And that's next month. And everybody will, depending on where you're at, will start losing their service starting, I guess, in next month. And by 2025, it won't exist anywhere in all of Europe. So we're pretty much done with the traditional phone. I don't know what that means, you know, for payphones over in Europe, if they're just not there anymore. But they're all going to be basically internet phones, VoIP, voice over internet protocol.
Yeah, that is so cool, man. Wow.
And that would be the end of that part of our thing. I guess we're still going to have the copper wires to our house, and maybe everybody do it, but we're going to have to, to have a phone, you're going to have some kind of box that turns like a router that turns that into something you can hook a phone into anymore. It's just plugging it into the wall is pretty much over. In the United States, I guess I'm wondering, my thoughts were, how far are we behind on this and does it even matter anymore? I guess I don't know of anybody that at home anymore now that has 3 or 4 cell phones. They really don't have phone service at all. Older people that love the traditional phone and know how it works, which is kind of simple, kind of still have it. But I wonder if it's just something here in the United States that will, at what point, where's the tipping point on where we do that here in the States? And maybe it's a state-by-state thing. Maybe out in the countryside it exists a little longer.
Pretty wild.
We start seeing in big cities go away. But in Europe, it's going away.
Thanks for the update, Dave. Really appreciate it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Have a great weekend, safe weekend. Look forward to speaking right back here Monday morning, 8 o'clock. Go get them, folks.
Cool. Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.